Eric Muadit, muadit.com. Let's take a look at the 3 charts that I mentioned yesterday that were, in my opinion, short ideas based on the daily chart. And I sent you the question as to why I was thinking that. In other words, it was some type of homework, and you did come back with your response. So the 3 stocks, VRX, which is this is the monthly chart. The other one is SPWR. There is the monthly. And then let's take a look at the last one, MTB. And there is the monthly. But all this were based on the daily chart. So let's go back to VRX and take a look at its daily. And the question and the hint, I gave you a hint that I was basing my analysis that the stocks look like a short based on where they were trading, which is yesterday, which happens to be around where they're trading right now and before they open. And it was based on the daily chart. And just to go straight to it is, number one, we've seen that, maybe I should do that, is one of the reasons why I already was looking for short ideas here. Let's go take a look at the monthlies again. Here for VRX, this one has been on my short watch list because it is about to move, if it moves, below the recent monthly closing low. And I forget the precise price level, but it was at about 90 or 89 and change. So I'm looking at this here. The market has had a nice one recently, and so I'm thinking if the market pulls back, this might here crack. And just for the sake of reference, let me just put the chart for the SPX and take a look at the weekly. So the S&P 500 has had a nice run off the lows here over the last 2 weeks. And so we are expecting some type of pullback in the S&P 500. In fact, let me show that. So the SPX is coming back to test this back test failure line. It is also testing the previous RSI break line, this red line. So I'm basing my reasoning here actually based on the big picture, which is the market first. And I think the market by itself is telling us that since it had broken down here, this break, which is off this high here, the market has hit that level a couple of times and stalled. And I've discussed this with you and subscribers on multiple occasions. And now we are coming here. And I think if the market stalls here, then all the other instruments that move with the market are going to stall. And so my thinking was that if the market stalls, then clearly the 3 stocks that I was mentioning as shorts at current levels could also stall. So we go back to that VRX daily chart, and what we see here, let's go to the daily, is just like the SPX. If we take a look at where the break took place, or at least find a break, it is not necessarily the major break, but it is one break that brought the market lower. We can see there was a break somewhere here. I can draw it somewhere around there. And just to be clear, really what we are looking for here is when you're drawing the uniformity line, you just have to trace to see where the movement began. You can see here, and then we go up. So stop there and then go up. In other words, we are trying to find the best line to draw. And sometimes you can play around with this line a little bit. And so if we take that point there, we can do it that way. Now, the one thing I want to stress here is you can actually test this line. Whenever you draw a uniformity line, it is good practice to back test it. And so we can do that. If we go backwards, by going backwards, you can see a couple of observations that the market was bouncing off the red line during that period when the market was moving higher, bounced off again that red line and the 50 level for this nice re-entry. Here it was sideways. The market was tending to show some resistance there. We moved back above the red line for this move here, and the market went higher, and then subsequently we fell here in August. And since then, so we find the August drop. Since this drop here below the red line, the market has struggled on this red line. You can see resistance on the red line here with uniform action for the highs there, resistance here for the highs right there. Here we come back and we break back below this line. We can also draw it like this. There's another break. which gave us this down period here. And since then, we've been hitting this red line and showing resistance. You can see that. So what I'm trying to get at here is this was a live situation where one could have gone short just based on the daily chart. Keep in mind that we are coming here to backtest a 50-day moving average. So this is my main reasoning why VRX was a short at current levels, because the daily was coming to show resistance on this uniformity line that we've also back tested. Now, while I was drawing this line here, I noticed something that I'm sure it's hard to understand at first, but even this period here was uniform action above the red line and back below it. It's important to understand that distinction, because that is a key to understand when you see uniform action. In other words, what's going on is, so assuming this is a red line, so I'm talking about this line here, and assuming that this box period here, so I'm going to draw that box period, the RSI is doing this. It went above it, touched the line, went higher, slightly lower than the previous peak, and went down. So if you break this into two parts, you find that both of them are uniform action. So this half is uniform action above the red line and back below it, and the other half is also another example or instant of uniform action above the red line and back below it, which makes that uniform action. When you combine the two, it's uniform action. So this period here, in my opinion, was also a sell signal, because let me draw that again. This period here was also a sell signal. Why? Because the market did show uniform action. So since this break here, the market has been just giving us lots of uniform action on this chart. And each of them, including this one here, have been giving us nice highs. And so now we see that with the market trading here at about 95, 94, 96, it was coming back to show resistance on the red line. Hence the reason why I was suspecting around here it could be a good place to take a position, maybe your first initial entry on the short side. So in your response, you are talking about you're not sure that you should be taking a position around here, or wait for the stock to move below 38.2. Now, I think that is the wrong way to look at this, because at 38.2, you'd be missing out on the premium entry. In other words, if it was to eventually come back and break through this support line on the lows, yes, that would be a nice place to go short also. But why give up on the nice entry here if it is going to turn around at current levels, is what I'm getting at. So yes, it could eventually be a good short when it breaks even lower, because that would suggest that the monthly has broken down even below the recent monthly closing low. So I get that. So yes, if the monthly was to break here, that would be also moving its monthly RSI below 38.2. And maybe that's what you are talking about. I think that's what you are talking about, that you'd rather wait for the movement below 38.2. And I'm going to counter that and say, I would rather you own this before the movement below 38.2. The movement below 38.2 tends to bring a washout or a major move lower. And you'd want to be in the stock before that move so you can be part of it. In other words, that's the best way I would talk. Just for example, if you take a look at this chart, there was a big move when the stock moved below 50 during this month. So I would rather you have been short way before that when the stock made a 3-year low. So I would rather you were in the stock. I would rather you were in the stock, let's see where, somewhere here, at the break up to 3-year lows, which was here in the 200s, before the move below 50. In other words, we are making all these moves in anticipation of a bigger move, and we want to be in there taking positions. And remember, I advocate that we take positions not in one large sum, but break our entries into maybe 2 halves or 3/4 or 3/3, or 4 quarters, something like that. Just break our entry. So I would say, based on that the daily was telling us here we can take an initial position to the downside, and that's what I was getting at. And yes, this can also be looked upon as being rejection at the 50 line for this chart. So every time this stock has been struggling to hold above the 50, you can see here uniform action above the 50 line and back below it. There is another sell signal, uniform action above the 50 level and back below it for another short-term high right there. So let's draw that 50 line, which of course is the dotted line, but there it is. There's also another rejection at the 50 line with uniform activity here for the highs there. There's also uniform activity rejection over the last couple of weeks and also now here. So if it is rejected at the 50 line, then again we see another reason why it could stall around current levels. Additionally, you're also talking about the MACDs coming to test the 0 line, and that's another aspect here of this analysis. Now, personally, I would say I was basing my reasoning based on the daily chart here, and again we can see today down 3%. So there is a reason why I did stop recording the video earlier before they open. Now the market is open, and we can see one of the reasons why I was saying that this is an area to go short is playing out perfectly. And it's very simple. It's the line here. I think when you start looking at maybe other settings, other parameters, sometimes it can become overkill. And sometimes you have to strike a balance. Is it overkill or is it prudent research? And I think I guess there's no correct answer. Sometimes I think we overanalyze things. But let me show you something here also. And this is something we've been talking about the last couple of days, and why I was leaning to taking that idea that the 3 stocks were going to go down is also the NASDAQ here was coming back to show backtest resistance. And if the NASDAQ was going to fail, which it's starting to show signs of doing that, failing at this moment, which might eventually break out, who knows? We can only go by what we see. Take a look at the Dow on the daily. We've been talking about the Dow coming back to test this line here, this red line, and stalling. Also there's another line, a couple of lines coming here, and so all of these lines were coming in contact here. Now the reason why I wanted us to consider taking short positions is if the market is to drop, whenever it moves below 50 on the daily time frame, we're going to have a big drop, and that's going to influence other stocks, and the stocks are going to be down also. So what I'm trying to say is that we want to take positions in anticipation of some of these moves, because that's where the money is. The money is being in a trade before it actually plays out. Yes, there's a risk that the trade might not work out, but there's always that risk. So that to me is not a strong argument for not taking a position. In other words, you're always taking a risk, irrespective. So we see the SPX right now, this being Friday, February 19th. We can see that it is moving below 50 right now. Market's been trading for about 10 minutes. If it stays below 50, expect this to be a big down day. And by a big down day, I'm talking about maybe 1% minimum to the downside. Sometimes it tends to be more than that, but generally 1 to 2% is what you see on a big down day when markets are moving below 50. But if it's truly a market that is looking to go down, it would not surprise me to see the market even be down more than 2%. And that's why I was saying we need to be taking that position as in anticipation of some of these things. And so we go back to that VRX daily chart. Just want to mention the fact that you had talked about the MACDs. And the MACDs, you can see here coming back to test this 0 line right there. And generally speaking, whenever you see uniform activity rejection on the MACD, any rejection that is uniform activity rejection, that tends to be a sell signal. And so I think I don't want to give too much weight on the MACDs for now, because they're not giving us any major move. Okay, so I would just I wouldn't put too much weight on the MACD. I'm putting weight on the RSI, as I mentioned before. I think that's, to me, is the most important thing, is the RSI. The MACD tends to be for color. in my opinion. Take a look at VRX, and you are talking about the weekly chart. Here I have 2 years, and let me take a look at your comments here. If I can just post them here just in case, just for reference. Just put them here so everybody can see what we're talking about. Okay, so you're talking about 3-year RSI resistance. So 3-year weekly VRX resistance, MACD 3-year low. So let's take a look at that. And I think you're talking about the fact that the MACDs are pointing higher. I think that's what you're talking about here. And I think this is where we get into a little bit of overkill. The reason why I say that is the MACD can be very confusing. Below zero, generally speaking, and this is generally speaking, below zero, the MACD should always be deemed as net bearish. I know that's a fantastic statement. But it's not a good statement to make sometimes, because one can say, but Eric, there's a crossover here on the smaller MACD setting, and the stock did move from 70 back to 120. That's a major move. Yes, it is. I get that. But I'm saying, generally speaking, you are looking for reasons that the MACD can confirm downside action in periods where it is trading below zero. I go back to what I just said is I would rather we look at the RSI, the measure of the sentiment. You can see the RSI even recently broke down here below 38.2, and that began this drop. You can see it on this chart because it's of the way the chart, but it dropped from 170, somewhere around 170s, and came back and did show resistance on that line. That line happens to be at about, also the highs here in 120 came about during this period, and the highs here came about when the RSI comes back to test that 38.2. So yes, markets are confusing, but I think if we are always putting equal weight on all the time frames, sometimes you can get confused. Here, I was basing my reasoning based on this daily chart and the fact that if we take a look at the monthly has been on my short list for the last couple of weeks. And you can see right now it's coming back. It's as close to breaking down below the recent monthly closing low. So even the monthly is giving a timely potential down move or potential sell signal. So that's why I was leaning towards short anyway to begin with. Also, we can see here for the day, it's very early on, but we're already down about 4.5%. So anybody who went long the last 24 hours based on what I was talking about is at least seeing some movement, and that's the key. All right, just so that we can make this video of a manageable length, let's take a look at the next one. Is SPWR. Here are your comments. 3-year monthly chart, I don't see any short until RSI hit 3-year lows around 40, hitting 15, 3-year, okay. I don't see any short until RSI hits. All right, so I get what you're saying here. Let's take a look at SPWR. And I absolutely understand what you're saying. What you're saying, it makes a lot of sense. In other words, you want to be a seller, or you want to short, or can consider shorting an instrument like with a similar chart if and when the RSI breaks to 3-year lows there, and if the MACDs can break to 3-year lows. I have no problem with that. I agree with it. But what I did here in recommending it over the last, yesterday, was the fact that, and I'll show that to you, again, we go back to the daily. Why? Because we're expecting the general market to pull back. And let me show you the general market today. Here we are seeing that even the market itself today is down. So that analysis that the market was going to stall is playing out. And in anticipation of that, let's give me a second here. Excuse me. All right, in anticipation of that, the markets here are, in my opinion, looking to go down. And so here, yes, I agree with you 100% that pretty much you want to wait for this to break down to fresh below 20, which is around where it closed, the lowest close on a monthly basis in 2015. you also want to wait for this to be breached to the downside, which would happen to be slightly around, let's call it about 38.2 thereabouts. I get that. But what I was leaning towards was the daily. I had seen that the daily had come back to a level where it was potentially going to stall. It was coming back to this line of resistance here. As of yesterday, it was hitting that level. And I was saying, let's take a position. And remember, yesterday it was trading at 25 at the highs of yesterday. Now trading at 22. So there is a nice reversal even from yesterday. There was also another line connecting the previous break. If we draw it, I guess we can draw it that way. Even this line here. So let me draw that so we can see that. If we take this recent RSI lows below 30.9 and touch this line here, extend it out, you can see double uniform activity above the blue line and back below it for the highs there. And here we have uniform activity rejection and also rejection at the 50 level on the daily. So all these resistance levels were coming in play. And so I was saying, before it ever gets a chance to move back below to 3-year lows, we can take a position in anticipation that eventually it breaks down. In other words, maybe it's a good idea to be in the trade even before it cracks, if it cracks, because you can see that short term the daily was giving us a short-term sell signal. And again, you also mentioned the weekly. And I think you are talking about you'd like to see the RSI trading below 38.2. Now, I think maybe I am responsible for confusing you with this number. I think I'll take responsibility for that. I think this number doesn't play out every minute, every time that you have to see a stock trading below 38.2. The 38.2 is based on the monthly only. Well, let me take that back. It is based on other charts, but when we are trading based on the major sell signal on the monthly, we only refer to the 38.2 level. So 38.2 comes in play mostly on monthly charts when you are looking for a reason why a stock can crash. So it's not to be also extended to other time frames necessarily. This crash type behavior happens when the RSI moves below 38.2 for the first time in 3 years or for the first time ever. It's not to be used every instant on the weeklies, on the dailies, that you have to insist that the daily chart be moving below 38.2 or that you have to insist that the weekly chart be moving below 38.2. I think I'll take responsibility for that confusion. What we are talking about here is, let's just take a look at any chart. Let's go to SPX. I think that's S&P 500. Let's go to long-term charts here. I'll show you a couple of periods. This period was very bearish. This is the .com bubble bust. Once the RSI jumped below 38.2, you can see that the market had a major move lower. So we're talking about this period here. There was a huge drop there. So if you are going short an instrument, you want to be part of this 38.2 drop on the monthly only. So only on the monthlies where we see this behavior. Of course, we'll see the same behavior on weeklies and daily charts, but I think we should not just always sit on our hands, wait for 38.2. Why can't we be in the trade before 38.2? Because 38.2 is a washout. Take a look at this crash in September of 2008. This is where we have this crash period, and it is coinciding with the move below 38.2. So that's what I was talking about. So maybe I confused you with the 38.2 number. That 38.2 number only plays out when markets are moving on the monthly charts below that threshold. Now this is absolutely similar to, let me see whether I can think of a chart off the top of my head. And the stock that immediately comes to my mind, take a look at Facebook here, and pretty much what we are talking about here is the opposite. So here on the way up, you can see that Facebook started moving on this chart once it cleared this level here. So this breakout above 61.8 on the monthly began this move from about the 20s, mid 20s to higher 20s here all the way to the current high. So the movement began here. So on the monthly, that was your entry price based on that breakout. In fact, to see it clearly, let's take a look at another idea here. Take a look at Tesla. And what we see here is the same but exact opposite action, which is Tesla moves to a breakout, 3-year highs here on the RSI. Let's show the MACDs here for the sake of clarity. So the RSI moves to all-time highs, 3-year highs there. We can see here the MACDs also move to 3-year highs. So there's the ultimate MOA, the breakout during that phase. So that meets the minimum requirement there, here, and also there. Keep in mind that we only need one of the MACDs to confirm this, not both. Both don't have to be at 3-year highs or all-time highs, just one of them. So we have all of them here showing that they are meeting the minimum requirement. And the key here is what I call the universal low breakout, or what I also call the phi breakout. And I'll show you a video series that you've probably seen on YouTube. But anyway, here you can see here, this breakout above 61.8 is the magic number. It is the exact opposite of 38.2. So using this chart, we don't have to look at the daily, the weekly, the hourly. Once we see the breakout on the monthly, we act upon that. And that's pretty much what I'm getting at, is the movement we are talking about here to be observed more on the monthly chart as opposed to other chart settings. So, and I think I'll take responsibility for the confusion there, because I do mention this a lot on my hourlies, dailies, and weekly analysis, but it's because sometimes we're looking at short-term situations. But I don't think we should always wait until we see this movement. We can always play the anticipation, or we can always, I guess, understand that it is the big picture that is controlling more often than not, and not the smaller time frame. So here we see that, and also just want to share with you here that if you want to take a look at the series here on YouTube, it is called Universal Low there, and it's a series of videos here that go into details about this 61.8 and also a little bit of a 38.2 analysis. So let's go back here and take a look here at the last stock, which here are your comments here, and just so we can all see what we are getting at here. So you see here you're talking about MTB, 3-year lows. Here you seem to be going towards, let me see here. All right, so let's take a look at, you do agree here that the monthly looks bearish, and that's true. We can see the monthly chart RSI is at 42.66. It already broke down, so this has been a sell signal stock over the last 2-3 months. Once it broke down here, at the same time we can see that the MACDs moved below zero, or at least one of them did, and the main MACD was already trading at 3-year lows long before the current market. So this has been on a sell signal chart. All these moves to fresh lows on the main MACD. And so yes, the monthly is bearish. If we take a look at the daily, which is where my question homework was, and it's very simple. We broke through here. You can even extend it that way. And you can see that we had come back, broke through here. We tested this line and failed for the highs there. We were coming back as of yesterday and testing that line, and I suspected we were going to stall. And since then, the market is showing that it is pulling back. Yesterday, it had a big down day, by the way. Big down day right there. I'll call it about 2-3% as it moved its daily RSI below 50. We can also see that, and I haven't done this, but I think I can see that if I draw a line connecting the highs, let's go back here. If I draw a line connecting the daily RSI highs and I adjust it slightly, we are also coming in contact with that line. So I was looking at this as already a situation where the stock, in my opinion, is looking to go down, and we were just using the daily chart for entry. We were not trying to look for, to complicate the whole scenario. And here, during the part 2 of the world market, I guess the US market analysis, I had discussed that this stock would be a fresh short if it cracks below 2016's weekly closing low here at about 104 and change, which is this weekly closing low. So if it cracks through that after 2 weeks of rest, so this is a 2-year weekly chart. Let's take a look at a 1 year because I wanna show something here. 1 year just to show that, okay, so we made a weekly closing low there. We had actually the weekly closing low is right here at about 104.7, somewhere around there. And so that after that recording of that low, we've had a couple of weeks to the upside since then. We've closed here above that 104 level, we closed higher here, we've closed higher, we've closed higher. All these are what I call rest periods. In other words, you went, you made a low, and you traded. The next weekly closing lows have been above this low. So all these periods here are what we call rest periods. In other words, after recording the low, now you go and rest. And we only need 2 weeks of rest before we can get a fresh break. For this to be a fresh move, we need at least 2 weeks of rest on the weekly chart. And so here we've seen more than 2 weeks because we have week number 1 here, 1, 2, 3, 4, and now this is week number 5 since this closing low. So we've had our 2 weeks of rest. Any break below to fresh weekly lows is going to be a fresh momentum trade. I hope that makes sense. And we can go into this as we go deeper into the mentorship program here. But so here, not to confuse ourselves, the monthly is already bearish, and I just decided instead of waiting for the move below 104, why don't we use the daily for an entry? Because if it's going to eventually break 104, we can try and cheat by going in the trade a little bit earlier. Now, the one thing I do notice in your analysis, you are always going back to the MACDs, which is okay. And so let's take a look here at the MACDs. We can see the MACD has come here over the last couple of months since December. Seems to have been rejected on multiple occasions when trying to move above zero. Right now it is coiling above zero and maybe could go back below zero. In other words, it is above zero and could eventually go below zero. Every type of uniform activity at the zero line and back below it tends to be a sell signal. Now, the one thing I did want to talk about here is over-reliance on the MACD. What I was going to say, if I was given the top 10 things to look at. So we got, top 10 things. So 1, 2, 3, go on and on. 6, 7, 8, 9. Top 10 things to look at. I would say the first thing is sentiment. Right? The first thing is sentiment. I think sentiment comes before price movement. If you really think about what makes a stock move, because why would a stock trade at $100 today and then over the next 3 hours trade at 101? Something must have changed. I think it's a sentiment, and I think the sentiment can be captured by the RSI. That's why I spend most of my time looking at the RSI. It's a sentiment to me that is most important. The next important thing to me is gonna be not number 2. Number 2, I'm just gonna leave blank because I don't think there's anything as important as sentiment. 3, I'll leave blank, and then maybe then number 4 on my list. So here, blank, 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 and I would say 5 is price. I would say price is the other thing we can look at in terms of price setup for an idea. Now you'll notice most people will clearly spend a lot of time looking at price action, and I think that's fine, but I think that's where you get a lot of mistakes. Lots of mistakes. Lots of them. Okay? Just because you're looking at price and forgetting the underlying reason why price is moving. I know people say price is king. I think price is prince. RSI is king, if not God, in the trading world. But that's my opinion. And then the next thing for me, and this is just for me, not for you, not for any other person, but for me, then I would come and take a MACD would be at number 9. In other words, it's not even number 7, it's not number 8. MACDs, I probably don't look at it 60% to 80% of the time. When I'm making my decisions, personally, the MACD doesn't really factor in a lot. The MACD will confuse you. Remember, the MACD is just the average of moving price action. You know, it's there for color. I think if you over rely on the MACD, it will confuse you. You're going to just complicate your trading analysis. So I would say the first thing for example, let me just show you. A lot of people, based on breakout analysis, would have seen this as a breakout. I know this because I used to do this myself. This was a slight breakout. And people go along here because at least they're waiting for momentum. They buy the breakout. But what they fail to see is that the stock just simply came back to RSI resistance. Sentiment did not change. Sentiment was being back tested, was going to fail. It was testing the 50 RSI level. So if you take a look at the RSI tells you this breakout here was a trap well before the breakout. So that's why I say, to me, RSI is number 1. Price, next. And then MACD, maybe. So I guess I want to stop there. The video is long enough. What I can expect from you once you review the video, feel free to continue this conversation, because that's how we get to step 2. Let me know what you think. If you have questions based on this video, if I missed something that you mentioned, I know it's a lengthy video. We've discussed a lot of things, but we have to, just wrap it around here. We can continue this on maybe part 2, part 3, based on your questions and your input. So again, I think we should kind of ease off on the MACD analysis. I think it's going to confuse us. And also we should be very rethink this idea of using 38.2 on all time frames all the time. We have to first and foremost look at this from a monthly chart and probably take it from there, but not to always expect your weeklies or even dailies to be moving below 38.2 for the trade. By the time it moves below 38.2, the trade is long gone. Okay? Because, for example, take a look at this one as a simple example here. By the time it's moving below 38.2 on the daily, the trade is long gone. We're talking about this move here, which is okay. Right? It's okay. It was profitable. But the sell was obviously here. Right? After recording this high, we broke down, and this was resistance over a period of weeks, and then uniform activity here in December for the highs there. And since then, RSI told you to expect lower prices, and voila, bang. Eric Muadh, muadh.com. As always, good luck, peace, and blessings. Yes, I am out. Mwah.